Okay, this is probably going to be my fifth and last video I'm recording today. We are doing Crocs. Now, the reason I'm doing Crocs is because one, I just bought the stock, which I will go over in a portfolio update video sometime today or tomorrow. Probably, I don't know. Well, I don't. Probably tomorrow. I don't know. But anyway, Crocs has what I imagine are excellent financials. I kind of glanced through them a little bit. And their stock has been dropping a lot recently, most likely because of some lowered guidance, but their earnings report was really solid. So we're just going to go right into it. Make sure to subscribe and let's do it. All right, so let me get rid of the NVIDIA results here quick. This is Crocs. So going right into it, cost of capital looks okay. Target price is above, and long-term growth is 4.6, which honestly is not great. But again, that's why I have all this stuff here. It depends on the industry. Beating inflation. I'm probably never going to give a 0 score there unless the long-term growth rate is negative, just being honest. Let's go right into the income statement. So should be pretty decent. I looked through it a little bit earlier today. They're estimated to see all-time high growth. I mean, they've been consistently growing their sales, which is nice. Cost of goods sold actually went down along with the sales growth, which is awesome. SG&A expense did increase a little bit though, but the EBIT is actually lower, which is not fantastic, but I mean, also, I don't really know too much to what to say there. I mean, I'm still giving them the credit, to be honest with you. Compared to 2 years ago, it's just so much higher. And also, the results are not finalized yet. Net income is supposed to be a lot higher, though. That's awesome. EPS looks great. Total shares, hoping to see some decreases, which we are. Especially, so it was low. It looks like they did. Oh, actually, used to be much higher at 78, and they are at 58 now, which is wonderful. Liking that. Let's check out the balance sheet, see if we continue the good streak here. Cash, a lot of short term, not a lot of cash. Now, to be fair, the ratio is decent here. I mean, the short term is coverable, but compared to like their overall debt, their accounts payable, their cash really isn't fantastic. Assets look pretty solid, consistent growth. Short-term debt, again, so I did the 0.5 here only because their cash is not great compared to their short and long term. I mean, especially considering like the accounts payable too, that's really not great to have less cash than all of that. In terms of debt decreasing, it looks like they took a chunk out of the long-term debt in the past year. Not so much with the short term, but again, with it being so much more than their cash, I really am not the biggest fan, if I'm being honest. So I'm thinking, I mean, with a long, I'll go into the quarters and really dive into it here, but let's see how long their long-term debt has been decreasing for. So 3 quarters, bit of a skip. So it was up at 29 basically 10 quarters ago, and now it's at 1.7. So I think I will give the credit there. That is fairly significant progress. Going back to the years, here we're looking for retained earnings, which are very solid, liking that. Let's do the cash flows. So far, really solid across the board. Already beating like a third of the companies I've reviewed, which is nice. Operating cash flow looks great. Investing cash flow looks okay. Financing is decent. Looks like they issued a lot of debt in 22, but they've also been reducing it. Free cash flow is, again, really solid. So overall, very solid with everything. So for the use of cash, their repayment of debt, we already kind of saw it. I mean, has been not fantastic. They've been issuing more than what they're paying off, especially over the past 3 years. They've been fairly consistently issuing for the past, looks like 6 years, but they've really been ramping it up. Now, in 2023, they slowed it down a lot. Hopefully in 24, they cease altogether and keep repaying, or something else, we'll see. But for now, it is not great. For stock repurchases, they have not issued since 2016, which is awesome, and have been repurchasing a lot, which I really like to see that. Let's go to the ratios, see what that looks like. Hopefully it loads for me here. My internet's been a little weird because I'm at a school building, but maybe it'll work. Maybe it won't. We will see. All right. So SGA to sales decreasing from 21. Looks like it used to be much, much higher. So on the lower end of their, especially the 5-year average, it's below that, which is good to see. Net margin, again, 5-year average is 19. We're at 20 right now. That is great. 1, 2, 3, 4. Oh, there we go. Okay. So in 2019 and 2022, it was a lot lower. I was wondering because I saw the 31 and the 22 there, why it was lower, but so pretty good, above the 5-year average, which is good. One thing I am going to try to start doing is basing it more off of the 5-year average instead of just my own predictions. So the 5-year average is a little more reliable than just my own brain doing things. But for something, it depends. Like for ROA and ROE, the 5-year average is 181, which is just insane. That's just because 2022 was amazing for them, and it has been actually declining, the return on equity. So that is one thing to think about. The ROA as well has been declining. So you know what? Actually, I think I will go with that and say, now usually I look for just consistency of like positive and consistency, but those kind of decreases are not something that's the greatest. And then long-term debt to total equity used to be insane. Actually used to be better, but considering it was at 6,500 in 2021, not too crazy to be at 131 now. Now 131 is high. I am honestly going to add a thing here that says maybe oops, sorry, I can't type, below 100%, just because kind of a big deal to be below 100%. So again, not great there, has been decreasing, which I like, so I'm giving the 0.5. So overall, Crocs, another really good one. That's 2 in a row. We just did NVIDIA. So 91, 20.5 out of 23. Really, really good. Oops, right there. 91%. Excellent rating. So overall, very good. That is now the top 2 in the past back-to-back. And you can see here, I mean, November 12th, I've been recording a lot of videos today. I did Enphase, I did Disney, I did Crocs, I did NVIDIA. I think I did another one that I can't find. Oh, I did Alibaba too. So I've been reviewing a lot. So again, that is it for Crocs. Hope you enjoyed. Hope you got something out of this. Make sure to subscribe, and I will see you in the next one.